Hey everyone, welcome back to the channel. Today we have a jam-packed schedule. First, we will look at the FOMC meeting and look at how the market reacted to the news. Number two, we are going to look at the Tesla earnings, see what were the numbers, what did they come out with, look at the chart and see if that is a good time to either build your position or start a new position. And number three, we are going to look at Intel's earning as well. We'll look at the numbers, we'll look at the chart and see if it's a good time to buy Intel or not. So if you find any value out of today's video, don't forget to hit the like button. So without further ado, let's dive in. So as most of you know that Jerome Powell, aka Papa Powell, and provided us some insights on what is Federal Reserve going to do. But before I show you that, take a look at this picture and let me know what do you think in the comment section below. The key point right now is we stay course. As of now, they are not raising the interest. They are going to keep the interest level to the same level. What they will do though is they will start increasing the interest rate from March. They also go to say that with inflation well above 2% and a strong labor market, the committee expects it will soon be appropriate to raise the target range of the federal funds rate. Jerome Powell also said that the asset purchasers also are likely to halt in March. Now again, he has used the word likely, which means that when the time comes, they will make a decision whether they need to halt the purchase or not. So as of right now, I guess we are clear. We know that they are not going to halt the purchases at this point in time and the rates will remain as is. When the news came out, the market rallied back. However, at the end of the day, the market gave up some of the gains. The Dow is down about 0.38%. The S&P is down 0.15%. The Nasdaq is up 0.02%. Does that mean that are we out of the slump? I don't think so. Looking at the chart for the SPY, which is the S&P 500 index fund, SPY is trading very close to the 300-day moving average. Is this the bottom of the market? I don't know, and nobody can tell you that. Will we have a V-shaped recovery because Federal Reserve is not raising the interest rate today? We don't know. We may still be in this choppy water for the next few weeks and months because remember, some of the companies, they have reported and accepted that the supply chain issue is there. Now, I made a video last year when a lot of people were talking about supply chain issue is a short-term phenomenon, is going to go away. It's not that simple. As you can see, the entire of 2021 is over and now still companies are facing supply chain issues and the chip shortage. So that continues. It is going to take a while before these situations stabilize and companies are feeling the heat as well as they start to come out and say that in their statements. One of the statements we'll touch upon is Tesla after this. So what should you do as an investor in this scenario? Well, stay the course. If you are investing in index funds, stay the course, continue to dollar cost average, and whenever you see these nice dips to 300-day moving average or below 300-day moving average, you add to your position. If you like the Nasdaq index, you can do the same thing with QQQ. Currently, it is trading below the 300-day moving average, so you can continue to add to your position as you see fit. This is not a financial advice for you to buy, sell, or hold any of the securities mentioned in this video. Always do your own due diligence before you invest your hard-earned money. Moving on to Tesla. Tesla came out with their earnings today and after hours, the Tesla stocks are up $6.56, about 0.7%. The company racked up $2.3 billion in GAAP net income during the quarter and $2.9 in non-GAAP net income. So that is amazing. Their revenue growth is up 65% to $17.7 billion. Tesla has produced 305,840 vehicles in just quarter 4, which is up 70% year over year, and has delivered 308,650 vehicles, which is up 71%. Amazing numbers from company like Tesla. The operating margin was up 14.7% of sales to improve from last month, and the gross margin came out to be about 30.8% versus 30.5%, which was last quarter. So you can see how the company is improving such a rapid pace. Tesla says that the company is still in the process of finalizing the manufacturing permit from the local authorities for the Berlin Gigafactory. So most of you already know this who follow Tesla. You have a factory in Shanghai, you have a factory which is in Berlin, and the new factory that is being built in Austin, Texas, along with the fourth factory they already have in California. So once we have the Gigafactory Berlin starts producing vehicles, you will see a much larger delivery of vehicles as well as the production of vehicles in the coming months and quarters. The solar deployment of 85 megawatt were down 1% in quarter 4 compared to the last year. Tesla ended the quarter with a cash position of $17.6 billion, with the total debt excluding vehicle and energy product financing fell to $1.4 billion at the end of 2021. And anytime people talk about that Tesla is too expensive as a stock, I just want to point you towards the trend of the company. You should look at their balance sheet, look at their income statement, look at how the gross profit, how the net margin, how the EBITDA is improving, and then make a decision for yourself, is this the company you want to invest in? Now, looking at their gross profit from last couple of quarters, back in 2020 first quarter, they were lost. They were not making money. In quarter 3, they are bringing in $3.6 billion, which is up 26.9% quarter over quarter. Their total revenue is $13.76 billion as of last quarter. The same can be said about the operating income. They are bringing $2.6 billion as of last quarter, and their net income is up to $1.62 billion, which is up 41.68% as of last quarter. Moving on to their cash flow, that is a very important measure that you should always take into account. The cash from the operating activities, that is up 48% as of the last quarter we are talking about. The fourth quarter results will be posted a little bit later over here. Now, one of the key metrics when it comes to value investing is people talk about the price to sales ratio or price to earnings ratio. Now, if you take an absolute value that this is the price to earning ratio that you want to pay for a company, and you decide to buy that stock or not buy that stock. Now, from a valuation standpoint, if you use the traditional valuation method, you will probably not buy Tesla as a stock because your price to earning ratio is 251, and you would say, hey, listen, I don't want to buy this such an expensive stock. But as a growth investor, what you should also take a look at it, look at their price to earning ratio for each quarter. Look at the trend. Trend is what will give you the guidance of how the company is progressing. If you just look at an absolute value, you probably are not going to make a very informed decision. In quarter 2 2021, their price to earning ratio was 354. In quarter 3, their price to earning ratio is 251. They have dropped almost 100 points there. If they continue to drop 100 points every quarter, of course that's not going to happen all the time, but as they continue to make more revenue, bring more profit, the price to earnings ratio will decrease. The price to sales ratio has stabilized at about 18.59. This is why I feel that it is important not just to look at an absolute value, but look at the trend of the stock and trend of their financial performance. That is the most important factor. Tesla has also stated that they are running below capacity for several quarters because of the supply chain issue. We see the supply chain issue getting better over some quarters. We will see these numbers drastically improve for Tesla as a company. So looking at the Tesla technical chart, if we take a look at it right now, Tesla is below its 100-day moving average. It had briefly touched its 200-day moving average about 3 days ago, which was, I believe, a Monday. Right now, my baseline for entry into Tesla is about $890 to $900. That is where I would add more positions into Tesla as I see that stock falls below that. If the stock touches below to 200-day moving average, great, I'm going to add more to Tesla. So that is my plan on whether I will add Tesla or not. Moving on to Intel. Intel's current stock price is down $1.17, which is about 2.26% after hours. In last 1 year have been dropped about 8%. Year to date, they have returned 0.97% negative. So for the period ending December 25th, Intel has earned $1.09 a share on $19.53 billion revenue. As you may already know, Intel is a very big company, and every quarter they are bringing about $19 to $20 billion. The Wall Street had expected the company to earn about 79% per share, and they came up with a 1.09. So that's a beat right there. And the revenue expectation was $18.36 billion, whereas they came up with $19.53. So they beat both on earnings per share as well as the revenue. One of the main reasons that they had such a strong revenue was due to their Intel's data center group, which generated $7.3 billion in sales, up 20% year over year. The Internet of Things, Mobileye, saw a rise of 36% year over year to $1.1 billion. So as you can see, this is starting to pay off already. The Intel's client computing group generated $10.1 billion, and this was down 7% year over year. So for the first quarter of 2022, what is their future guidance? They expect to earn about 80 cents per share. So it is definitely lower than what they came up with the last quarter. They also expect the revenue to be in line about $18.3 billion. The gross margin fell 3.2% to 53.6%, which is also down from 56.8% in a year ago period. And one of the most important things about Intel, if you don't know, Intel pays a dividend, and they went ahead and raised the dividend by 5% to $1.46 per share on an annual basis. And this is a statement from the CEO, Pat Genslinger. Our disciplined focus on execution across technology development, manufacturing, and our traditional and emerging businesses is reflected in our results. We remain committed to driving long-term sustainable growth as we relentlessly execute our IDM 2.0 strategy. So Intel is a very solid company to have in anyone's portfolio. It is a quality company. And if you are in a semiconductor space is going to grow in multi-folds in the next coming years. So as you will see the rise of electric vehicles, as you will see the rise in metaverse, as you will see the rise in cryptocurrency and all the related technologies, the semiconductor is at the focal point. So if you do not have any stocks in the semiconductor space, I highly recommend that you take a look at it and see if you would want to add companies like Intel, Nvidia, AMD, or TSMC, or even look at ETFs that have these bunch of semiconductor stocks in their portfolio. Intel's stock price is actually down 100-day, 200-day, 300-day moving averages. So if you already have a position in Intel, this might be a good time for you to either dollar cost average into it, or maybe even wait and see if the Intel can come down to back to the 47.83 level. Right now, Intel is still around the 44 mark at the RSI level. So we may see some downside in the coming days. If I were to add Intel in my portfolio, I would wait until 47.96. That would be my ideal price to enter. Let me know in the comments, what are your thoughts about Federal Reserve, Tesla earnings, or Intel? Do you have Tesla or Intel in your portfolio? I would love to know that. So if you found any value out of today's content, don't forget to hit the like, click on subscribe, and ring the bell notification. I will see you next time, my investor family, but don't forget to invest for tomorrow.